Hey everybody, Boris Lasser, BK Force. Welcome to our Forex Weekly Technicals for 3/31/404 of 2014. Where are the trades next week? Well, looking at the euro dollar, obviously, the week next that's coming up is going to be pretty critical for the currency pair. We have the ECB meeting on Thursday. We have the NFPs on Friday. The euro has certainly been under a tremendous amount of selling pressure pretty much ever since Draghi entertained the idea of negative interest rates. We had a big crack that pushed the euro all the way down. Every rally has been a sell, and that's sort of exactly what we've been talking about for the last couple of weeks, that every rally is a sell. And so far, that's very much held true. Euro definitely still looks to the downside on a longer-term basis. But what you did find today, which was kind of interesting, was that we found pretty decent rock bottom support here at 37. And the pair has managed to bounce off of that support all the way out to 37.50s. So whether this is going to be a little bit of a basing situation front of the week, and then perhaps a resolution of that price action as the week completes. The critical thing, of course, is going to be, I think, the ECB meeting on Thursday. If Draghi does not accommodate in any meaningful form, we may have a little bit of a dead cat bounce. But having said this, the euro, whatever bounces in the euro that we have right now, really are unsustainable in my opinion, until and unless we can recover 38.50 and hold it on a closing basis. That would put us much more into a neutral structure and could possibly suggest that this corrective wave is pretty much over. But generally, unless we see some sort of price action that really takes us all the way out to these levels, it's going to be very difficult to want to get bullish euros at this point, unless you're just simply bargain hunting and trying to scalp the move to the downside. A break here, though, would really put us into a much more negative construct. So a break of 37 really opens up a run all the way out here, potentially for a double bottom test of the 37.50s. So that's how the week shapes up for the euro. And it's definitely going to be a very, very interesting one for that pair as we go along. Now, as the week came to a close this week, what was interesting here is that dollar yen, which has just been absolutely dead, this 102.50 has just been a complete cap, finally broke to the upside. And assuming that we close out the day here above the 102.50, that would suggest actually a relatively bullish structure for yen, and a bullish structure for yen crosses. We'll go through the yen crosses in a second. But generally, the fact that the yen has taken out this 102.79 is very positive. We obviously have a slew of US data next week. And of course, all this can reverse pretty badly if we get a horrendous NFP number. But generally, given the fact that weekly jobless claims have been pretty good, given the fact that most of the economic indicators have not been horrid, have just sort of been hovering within expectation, it's unlikely that we have a surprising shock to the downside next week. And assuming we don't, that could provide us even more fuel here for a possible run towards the 103.50. That's the next big area of resist here for dollar yen. And if that can get captured, then we really built up a very nice base for a full-on move towards the yearly highs at 105.50, but that's too early to speculate at this point. For now, all we know is that perhaps this base has really finally been built, and we finally have an inkling of a breakout here as 102.50 closes out. Yen crosses start to look much more attractive. Cable, on the other hand, is having this V-shaped recovery, relatively decent, but it is facing pretty stiff selling here. It's 66.50, 6,700. It's got a very, very chunky area here that it needs to overcome. If it does overcome that and closes above 6,700, that really does set it up for a full-on assault of the yearly highs at 68. And that would be a story where the market begins to really price in the possibility of interest rate hikes before the end of this year. UK economy doing quite well, so on and so forth. For now, though, this still looks like a V-shaped recovery within a corrective phase, and we may be coming up here to a pretty meaningful resist at 67. If that fails over here, we could be correcting right back down to 65 as cable still tries to work out all of this overbought conditions. Aussie, on the other hand, very, very powerful move here all the way through the week. But one of the interesting things that you'll notice here, this is one of the things that Kathy and I look at quite a lot, the rule of 7, where you have 1, 2, 3, 4, 5, 6, 7 days of sort of consecutive higher highs. Statistically, very, very difficult to overcome. So meaning that once you have sort of 7 consecutive days of higher highs, the probability of an 8th day diminishes considerably, and the probability of a near-term top really comes into play. You can see that the Aussie, certainly after outperforming the week, everybody for a week and a half, maybe now finally starting to move into a little bit of an underperformance move if it kind of stalls out at this 93. Now, on the other hand, if it does take out 93, if this is just simply a pause and we take out 93s, the next run, of course, is going to be towards the 94, 95 level. That's sort of the just before 95, the 94.50 level. That's really been the next big point of resistance, and it would certainly create a very, very powerful rounded bottom here in the Aussie. But for now, I'd be very cautious. This 93 turn here, the rejection of 93, could be meaningful. And if next week we start breaking the lows of the Aussie, so the lows here are around what, 92.37. Basically, if next week, if 92 is given, that would suggest that we may have made a near-term top, and the Aussie, which was the outperformer this week, could be the underperformer next week. Kiwi looks a little better, but also facing the same sort of a headwind where the 87 rejection of the 87 is quite significant. So we'll see. It's always dangerous to call a turn. It may just simply be a pause, but it's certainly worthy to be very cautious. And I would not want to get long these pairs until and unless these levels were broken. So 87 has to be taken out to the top side, and 93 has to be taken out to the top side in Aussie in order to get really comfortable with the trade. Dollar CAD, last trade we want to take a look at. Dollar CAD finding support at 110. What is interesting here, though, is that we may be finally carving out some strength for the loonie. What I mean by here is if you look at this on a longer term basis, what do we see here? 112s as a natural resist level, right? So we hit a top here, we pushed a little bit through here on a little bit more extreme panic to the top side, but now we've kind of moved to the downside. We do have Canadian employment data. That would be interesting to see, because if that data starts to show an inkling of positive recovery, that is North America finally pulling Canada along with it, we could potentially have a move probably all the way down to 110, 109. So one of the interesting things here is we talked about the Aussie-Kiwi overperformance, right? Of course, overperformance has also been against the CAD. If CAD becomes better bid, then the overperformance of CAD against the Australian dollar could be in play here. So just as you see this big flame out in Aussie CAD, this could be a really potentially interesting turn trade here with relatively limited risk. So where are we here? 103.15 is the high, right? Basically less than 100 points away. To take a spec here, this could be the top, that Canadian dollar is going to be now stronger than the Australian dollar on a relative basis. Not a bad idea to consider into next week if you sort of bet on the idea that the Asia Pacific region on COM dollars are going to be weaker than North American COM dollars. Kiwi CAD, not as clear, but you definitely have a very, very defined top here as well, which is just above 96, although it's making a little bit more rounded bottoms. Clearly, Aussie is the weaker of the two, but still, the possibility that the Canadian dollar could outperform both the Kiwi and the odd. The odd being my favorite turn trade. Certainly something to worth taking a look at next week. Now, taking a look at the yen complex, because we talked about the fact that the yen may be finally breaking out. So let's take a look at, euro yen is the weakest because euro is certainly not performing well, and I said that euro is still a sell in the rally. So we have this tug of war between the yen and the euro. We did today have a big breakout because obviously euro covered up, and so did the yen. But you still have pretty decent resist here at 142s. You still have higher lows. It doesn't quite look. I would say if it does take out 142s and stays there, then it does set us up for a potential run towards the 144s. But this is not the best looking cross. Pound yen, on the other hand, does look quite much better. It is broken through this key 170 level. This 172 is the big overhead in pound yen. If we can recover 172, then you do have the chance here to push all the way out to the peak highs of 73, 73.50. And then if you think that the COM dollars may not necessarily correct as much as they appear, then certainly the big moves in the COM dollars on the yen crosses could continue. Aussie yen does face this big resist at 95.65, but it could have enough juice to push through the 95.50 level, certainly. Although it also looks very, very seriously overbought on this seven-day rule here. 1, 2, 3, 4, 5, 6, 7. Today's a 7th day where it's had a continuous rally. Although if you look at the past history, the yen crosses don't necessarily apply. So for example, here you can take a look at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It was actually an 11-day rally before there was a correction. But when the correction came, it wiped out like about 8 days worth of gains here. So I do think this kind of very, very sharp, very, very nasty little cut could occur in Aussie yen. So I just I would begin to be careful here, and certainly I would put a stop on the break of the day's lows anywhere you're trailing, because as you can see, when the turn comes, it can break 5 or 6 days worth of lows in a single day. The other hand, Kiwi yen looks kind of still looks pretty good. Does not have any resist here to the top side, and maybe it may extend a little bit more. It is not nearly as concentratedly overbought as Aussie yen is to the top side. This actually brings me down to the idea that if Aussie now becomes a relative weakling, one of the things that we've seen here is one of the things we liked a lot earlier was the turn in the Aussie Kiwi pair from the 106s, and that worked out very, very well. A couple of weeks ago we talked about this, and this thing just went up now to 107. But now this 107.50 clearly the top, and it may be a time to revisit sort of the 106 level here as we have a corrective move on the Aussie side. The last thing on the yen crosses is perhaps the CAD yen, which is something that does look better both on a relative basis and on a yen basis here, although we do face the 93-94 corridor as a big resist level. But having made this kind of a W bottom formation, that's a very, very generally very positive formation technically, suggests a longer term turn, and probably on the yen crosses looks as one of the more interesting ideas for next week. So wishing you guys the best of luck, tremendous amount of data next week, quite a lot of interesting combinations, and watch the COM dollars on a relative weakness basis, because that maybe is what's developing as this week comes to a close. Boris Schlossberg for BK Forex, over and out.